Hello guys, thanks for tuning in here with Trading for Everyone. In today's video we're going to be analyzing natural gas, and I'm going to be showing you how yesterday on Monday a price just pushed down like a beast, like 5% I believe, here in natural gas. So well, I'm going to be showing you the 10-day 30 minutes, but previously, as you remember, natural gas has been in an uptrend pattern here in a quite long ascending channel. And well, as I told you in a previous video, here we see a head and shoulders, and price was going down. But I told you that as it approached the SMA line, I saw it likely that price would push up, since it's very bullish during this time of the year, and all the expectations are that the price is going up. Well, that was the case. Price went really going up until it hit previous highs here in this, around this point, it previous highs, and then it plummeted like in a day. It plummeted like 5%. Price here to here is, yes, it's more than 5%, 6 or 7%. Well, while the market was open, the movement was not as much, but well, as you remember, these ETNs leverage 3 times, so well, that's quite big. And well, as you can see now in the 10 days or 2 minutes, price hit here low. You can see here, this was the low of the candle, and if I choose the body of the candle, it's a little bit higher. So we can see that this area is the area of support, I would say. Well, price went really up on Friday, and on Monday plummeted. Well, now it has pushed up during these periods, and now it's going to push down again. We're going to be watching closely if price is going to be penetrating this zone of support, and if it's going down this 2.5 price point. If price is indeed going to 2.5 price point, we should expect price going down to previous dynamic support of the ascending channel. So if price breaks indeed this 2.5, I will expect to correct all the way down to 2.4 for a 5% loss on DGAZ. So well, I expect price to go down, to continue going down in the big picture in 2, 3, or perhaps the whole week. But after that, I will see a good opportunity for holding UGAZ. But well, I believe that this is quite difficult to trade, because as you can see here, this is a descending channel. It broke above, going down, and now penetrated again. It didn't stay up this channel, to push up. But well, so we can go to UGAZ and see that UGAZ is in all-time lows. As I had said in other videos, I would have probably been up in a UGAZ trade. As you know, I don't like to hold trades during the night, because it's really risky with these leverage ETNs, that if natural gas pushes up or down 2, 3, 4%, then the ETNs push 3 times that in a direction that perhaps it's good for you, or perhaps it's all the other. It's really bad. So well, as you can see here, it broke the pattern, and well, as if you were in a trade here, your stop loss would have been hit with a 13% loss. But as you need to take into account that you don't have to hold trades during the night. Here, it could have been price going up this 15%, but that was not the case. And look at these 2 doji candles. They're really these two doji candles are really small compared to this red candle. So as you can see here, price went down 13% during pre-market, and during the day it oscillated from highs to lows of about 5%. That's a lot to benefit, but during the day, not holding trades. Well, before I continue, I would like to say you you click the like button in order to support my channel and to help the YouTube algorithm show my video to more people. Subscribe to my channel if you want to be updated with latest news in what happened to natural gas and what happened to the overall market in general. So, well, as I was telling you, we have to wait here on natural gas on what it does when it approaches 2.5. So if price continues going down and approaches 2.5, it will probably penetrate, perhaps bounce back and continue going down, but we don't know. We can't just take a guess on what price is going to do. We have to make trades based on analysis and overall fundamentals of the future in this case. But well, here in the 5-day 15 minutes, you can see that DGAZ pushed quite an amazing percentage from yesterday's in the pre-market hours. 11%. That's a lot. That's insane. This price was 3%. That's a good amount. I'm going to be showing you how to trade that 3%. Well, first of all, you set up your natural gas on the same time frame that you are in this one. So, well, I really like the 1 day 1 minute, but since it's yesterday, I'm going to be doing the 5-day 5 minutes. Well, you set up previous day, here the previous day. It's here. Well, that's from the market opened at 11:30. So we go to 11:30, and we say, well, this was where during the market was open. So markets open right about here in this big candle. That's this red candle. Remember, DGAZ is the inverse ETN UGAZ. So what it means is that it moves opposite to what natural gas does. Well, as you can see here, price was making lower lows. So, well, we could have taken a trade on UGAZ, sorry, on DGAZ, but that's pre-market. If you can trade pre-market, you can. So if you have the chance to enter positions here, to make your stake bigger, you just do it. That's not a problem with that. In pre-market hours, they are really low volume compared to during the day, but price movements tend to be higher since it's easier for the price to push up if less people are buying. But well, as you can see here, we see a big zone of resistance for natural gas. So we just have that. I'm going to remove these trains. This is the resistance of 2.5 that I was telling you about. But well, as you can see here, you see several times price bouncing back to this trend line, horizontal trend line. And well, as you can see here, price went up and continued going down. Went down and started making high highs. So when you see this kind of going up again and trying to break, you'd probably have an eye on UGAZ. Because as you can see here, it's like common for price to go up, to this movement up, a retracement, and then push up. But well, since it never broke up, we wouldn't take a trade on UGAZ. When it approaches this point, we probably wouldn't have entered a trade. However, when prices started falling down with this red candle right about 13, it was a good time to enter a position right out here. It was a good time to enter a position. As you can see here on DGAZ, we are on lows, but remember, we don't look at analysis on DGAZ or on UGAZ. We look at analysis on natural gas. So here we have the price that was bouncing back from this high. That was this high. So well, price was up, rejecting, and we are going to be holding to previous lows. And that's the conservative outcome of the trade. And the better trade is to hold until this price point that, well, was never hit, but was really close to. But well, and your stop loss would probably be like up here in this trend line, because if price went down and continue going up, it was probably for a rise on UGAZ. So well, see if you want to set up your percentage of loss on, like, it was this rectangle, this would be your stop loss, this would be your stop loss, and this would be your take profit. So well, as you can see, this good 1 to 3 perhaps difference in price. And since the market today was really moving quite a good percentage, there was 1% profit in natural gas. It's really good. So well, so when you see this, you enter trade on DGAZ. You enter trade here, right here, when it went up there and got rejected. This quite a dodgy candle I will see here, and start price moving down, you enter the trade. When you can, here on this candle, you enter the trade. So imagine that you enter the trade like in the highs. That's not even in the lows, in the highs. You ride the price until the price hit here this price level, this price level right about the previous low of natural gas. So that would be until 2 o'clock. Would you hold the price until 2 o'clock for a 2.1% profit? So you can see that today's market was really good. Like, it was amazing to trade this 2% for this 2% profit with a really easy setup in the market moving sideways. Most people like to would tell you that market moving sideways is not a good thing, but I believe that market going sideways is the best opportunity for us to enter trade. Since if we are wrong and trade goes the other way that we had predicted, and it's not the worst thing of all. As you can see here, market was moving kind of sideways. So if price went up this channel, that's when we up these previous highs here, we would have closed trade with 2%, 0.2% loss on natural gas. Well, this price, I don't know where I would have hit it, but I recall that 0.6, I would say, because as you remember, DGAZ is 3 times leverage, so most of the time it moves 3 times the price action of natural gas. So if here was a 0.2% loss, here was a 0.6%. So well, as you can see here, into the trade with a stop loss of 0.6, and your trade profit is all the way up to this price point here. It's a good 1 to 2, or perhaps 1 to 2.5. The risk of losing towards the risk of gaining the trade. So, well, as you perhaps have seen in other YouTube's videos of myself or other YouTubers, the risk reward ratio is good in the sense that if you are wrong in the trade, you're going to be losing half, perhaps, or a third of what you have been, of what you expected to earn. So that's good in terms that you can, if you make a good trade and then you make a bad trade, you're going to be up, you're going to be green for the day. If you had a 1-to-1 risk reward ratio, so like imagine you enter a trade here, right? You enter the trade here, but you close it when it approaches the moving exponential average. That's not a good trade. That's a 1-to-1 risk reward ratio, and yeah, you would have probably made from here to here a 0.5% profit or a 0.6% profit, but that's not good. That's not good, because if you had lost the trade, you would have lost the same amount. So that means that if the next trade that you make, it's a loser, you're going to be flashing away all profits. So, well, just remember that you always need to set up your plan. You always need to set up your entry point and your desired exit point that you have to draw in natural gas. Remember, you have to draw all price points in natural gas, not in DGAZ. Because if you would have draw them on DGAZ, for example, you just say, well, my previous lows are here. So my previous lows are here, so my stop loss would be here. And no, my stop loss would be here. I don't like to set stop loss like in advance. I like to see the market, and if you see that here's the stop loss, when price and natural gas hit this point, that's when we're going to close close the trade here. So you're not going to say that, well, that's the stop loss and this here is the profit. That's not the way we like to set up trades, because as you can see, price wouldn't have hit neither the stop loss nor the take profit, so price would have been, the trade would have been open during pre-market. And well, as it looks, if we had held, we would probably make a big amount of money when the price opens now, because, well, from this point to perhaps supposedly this point, we have 8 and 9%, but that's really risky, because market could have traded sideways, and then when market closed, the price would have gone down. So that's not good. Remember, make your profits big and make your losses small. That's how you are going to be a consistent trader. So, well, thanks for watching my video. Subscribe to my channel, and please hit the like button. And well, leave in the comments if you want me to dig any ticket for you, or to break down any pattern or whatever. So, well, thanks for watching me.